Okay, good morning. And let's have a look through, sift through the action here ahead of well, we've obviously been through the European Open already, but looking ahead through the day, we'll also just, first of all, just have a check back at yesterday's developments. And we've got to start with oil again. It's the key market. What a day for crude. If you, the thing is, you read the kind of stats, how much did the price of oil change on the day? And the answer is that was a small, modest drop of 0.37%. 0.37% down on the day, except that the high to low range was 5.29%. In what was a pretty remarkable session. Now, of course, the first thing is we made new lows for the year. We made new lows for the lowest since right in the crisis here. Now, we've had, I just want to clarify, in the briefing yesterday, I was talking about this low in 2009. Now, on my chart, I've got it at 33.50. There's a little bit of contention with this price. Other charting packages are showing it down at 32, more like $32. The 2008 low being actually lower, the December 08 low being lower than the February 09 low. So just be aware, I've got a 33.50 here, but there's a big price point around $32 as well. I'm going to add that in on the chart here, but we'll see. But I roughly put it in there. But 33.50 in my mind still important as well. But the thing about yesterday is we broke the August low. We made a new low since the crisis. You can see this is such a clear, one of the most remarkable reversals here in 2009. The only other reversal that was more remarkable than that was the one in 2008 up here at the top. But it's such a clearly defined technical level of support, and we'll see. Big breakout yesterday as we broke through the August low. Let me go to a shorter time frame. Let's go to a 1 hour chart. Big break of the August low, and this was just around midday, and we gathered momentum and tracked right the way down to 36.64. It's just then the rebound came in, and it was just phenomenal, the strength of it. So we hit 36.64. We then lifted a good $2. Now, bear in mind, as price is in the 30s these days, that $2 move is well over 5%. Just in short order, in just over an hour, bounce of 5%. Then we hit actually what was the Amplify Trading entry point short on our strategy report, bang on the pivot level. It's been such a good trade. I have to say, look back on your charts. Short the pivot on crude oil has been an extraordinary trade in recent weeks. It really has. And hats off to Vass and Bill for picking out the top of a 5+% move to almost to the tick. Then we got the reversal that came in equally as powerfully as we dropped another $1 back to test the low that we had on Monday. Then things settled down and we drifted into the close. Just an extraordinary day. There was really no there was really no news flow until we got the API numbers overnight. I'll talk about those in a second. But from a fundamental news point of view, there wasn't any. There was more broadly in the kind of commodity space, sort of generally, as we got Anglo America announcing that they're cancelling dividends for at least 2 years. They're also axing many thousands of jobs in sweeping cost cuts. We also had BHP Billiton announcing large reductions to capex. So the mining sector got hammered, and this led to a broad-based sell-off in equities that I'll talk about in a minute. But just to finish off on oil whilst we've got the chart up, a lot of this price action which led movement in other markets, by the way. This was just about a technical break of the August low, and then people just, either booking profit if they've been short for a few weeks, booking some profit on this sort of accelerated extension through the August low, or maybe there's some bottom pickers getting stuck in here. it's obviously a risky trade. Picking the bottom of crude oil, it has been, well, nothing other than expensive in recent times, as we set yet another new bottom yesterday, of course. But you know, the reversal was very powerful, but this was not driven off news. It was all price action. It was all technical, with the breakout and the profit taking.
Central Bank suspends new quota applications for RQDII offshore yuan investment program.
So just showing some China news there. Right, now we settle down. Let's talk about last night, because we got some numbers from the API. So today's important because we will get fundamental news from the US in the form of the Department of Energy inventory data. So we get the warm up to this last night as we got the API inventory numbers. And for the last 10 weeks, the API has shown a drawdown. That's a decrease in the level of inventories in the US of A. Except for last night, we didn't get a drawdown, we got a build. So it's the first time in 11 weeks. So I'm just trying to get my chart up. Here it is. Oh, no. So I did have a chart of it, I don't anymore. Maybe one of the guys can post it in the room. But what happened last night is we saw a drawdown of 1.9 million barrels. So that means that according to the API, crude oil inventories in the US actually dropped in the last week. As I said, for the first time in 10 weeks. Okay, here it is. Thanks. Here's the chart. Here's the crude inventory chart at minus 1.9%. So you can see all these green bars that we've had. And look, we had this run for the whole of Q1 of 2015 and the whole of April. So the first 4 months, massive increases every single week. Then we had a phase where it reversed as we went through May and June. Really choppy, but more drawdowns than not in July and August. But really since then, it's been a consistent build. And this is what's helped to drive, one of the factors that's helped to drive this, this latest wave to the downside for crude oil. It's not a coincidence that crude oil, if I just bring up the chart of crude oil on a daily basis here, it's not a coincidence that this sell-off in crude oil began in October, and we've gone from 51 bucks at the start of October to 36 yesterday. It's not a coincidence that this is coinciding with the API chart here, where we're getting an increase in supply throughout this entire period. So look, last night's numbers interesting. I don't think it's anything more than interesting. We've only got 1 week here of a small build. Let's go back to the 1 hour chart for crude. We've got 1 week of a small build, and do be aware that the Cushing crude number, Cushing being the most important storage facility, the biggest storage facility in the US, at Cushing, the inventory data actually showed an increase, an increase in supply. So that took the edge off the headline number that was a drawdown. But we did get a drift higher last night, but it was nothing more than that. We didn't even make it back to yesterday afternoon's top, just above 38.50. And this morning, hardly any movement so far, but just a slight drift lower. So we are trading almost back to levels we were trading when these API numbers were released. So we'll see when we get the Department of Energy data this afternoon. That'll definitely be a key part of the session. Now let's look at equities, because equities had a bad day yesterday. Depends where you look. On the S&P, percentage-wise, futures down 1.07%. Europe were worse off, more than double that. So the DAX was down 2.2% on the session yesterday. And importantly for the DAX, as you can see on this daily chart top right, we tested last week's double bottom, the Draghi low, set on Thursday, 10,630, tested on Friday, tested yesterday. So far it's held, but I think this is vulnerable. Similarly for kind of Euro stocks, testing last week's double bottom. Now the S&P didn't get there. For the S&P, the Draghi low is actually at 2040. So the S&P didn't get there. The US equity space not damaged as much as Europe. But As we've opened up today, the Asian session was negative. I'll talk about some Chinese data in a second. But at the moment, things are looking, we've had a touch of a bounce off the lows from yesterday, but I would say Europe looks a little vulnerable here. I would say there's a higher chance of a continued move lower. I would say a break of last week's double bottom will be important and will certainly set up a pretty quick test, I would suggest, of the November low, which for the DAX is 10,482. So I think we're looking at and let me bring in the Eurostoxx chart, which technically is perhaps even more important because last week's double bottom coincides with the November low set mid-November on the 16th. So this is key for Eurostoxx at 3,283. This was yesterday's low. So 4 times in the last 2 weeks, or let's say 3 weeks, 4 times in the last 3 weeks, we've bottomed out around this price point, 3,328. Very important. Technically, if that gets broken, then you can see there's open ground to move into on the downside here for Eurostoxx. As we head into next week's Fed meeting, it's hard, and as we get chaos in the commodity space, it's hard to see at this point how equities can rally. I think they look vulnerable, and technically, if these support levels, these key support levels, break on some of these European indexes, then we're going to see further downside, I would suggest. Okay, so that's equities. Just checking in on. Well, let's have a look at the data calendar because we had a decent amount of data overnight. So we had Chinese inflation numbers first up. Now, these actually came in higher than expected, which is a phenomenally unusual event. Higher than expected inflation is a rare commodity in itself. What we saw, here's the headline CPI chart for China. So we bounced off October's 1.3 low, and we're up to 1.5%. Okay, now this is definitely nothing to get excited about. Yes, fine, it's good news that inflation is higher than expected, but it's only marginally, and we're still way off the People's Bank of China 3% target, and 1.5%, as you can see, has been pretty much the inflation point of 2015. Yes, we've been higher, 2% in August. Yes, we've been lower, particularly in January, where we hit 0.8%. But by and large, 1.5% pretty much sums up this year, and this is where we're at. So it's not like this is the beginning of a reversal in inflation conditions necessarily. PPI, which is producer price inflation, looks still pretty horrible, it has to be said. Minus 5.9% for the 4th month in a row. This is the 45th month in a row of negative PPI. That's factory gate prices, 45 months straight. This is the commodity collapse story in one chart. If I go to a 5-year chart here, we turned negative at the start of 2012, and we have 45 consecutive months. And we're right at the very bottom, 4 months in a row at minus 5.9%. Not only is this thing not reversing, it's still rock bottom and maybe potentially going lower. And that's the thing with this sort of second or third or fourth, I lose count now, wave lower in commodity markets. It does carry, people have really got to genuinely start to completely alter 2016 inflation expectations. The idea was we'd hit 2016 and, the sort of very large negative factor that the commodity price drop has on the inflation basket would fall out of the equation, and we'd see inflation jump sharply back higher as we go into 2016. Well, actually, as it stands now, forget that. We're staying low for longer. So, Chinese inflation overnight, at least the CPI number was higher than expected, but this is nothing to get excited about at all. We've had some German trade balance figures, which, both on imports and exports were negative. And that's why, yeah, just check the DAX right now. Okay, well, this DAX is testing this level. Let me go to a shorter time frame. So we're right on this key price point for the DAX. This should lead it. Just looking at Euro stocks, is a couple of ticks off. We're 6 ticks off yesterday's low, which is the November the 16th low. It is the low for November. But just keep your eye on the DAX here, as the kind of negative vibe I've tried to describe here is just feeding through. So good early first test of this key support. Whilst you're looking at that, I'm just looking at elsewhere, because normally you get an inverse correlation when you're getting European equity movement. Of late we've seen a decent inverse correlation between equities and the euro. And what we have here, though, is a pretty flat euro dollar, it must be said, but we have ticked higher through the session. We are up above yesterday's high, which is up above the high of the day before. Now, here's the Draghi rocket ship taking this currency pair 5 handles higher on Thursday. We drifted back as we got a strong payrolls report and we priced in more the Fed rate hike. But I'd say in the end, actually, this pullback's been smaller than I thought it would be. We got to the 108 handle, and here we are now back above 109. So perhaps I'm surprised. I was expecting perhaps a move back to the 50% fib that I've got on this chart, 107.50, but no. So we've actually had a couple of days, 48 hours straight to the upside, nothing aggressive. It's just drifting very slowly. But if European equities sell off, we have had an inverse correlation. So it perhaps will continue to support this general trend, but it's been very flat, very quiet on euro dollar for the last few hours around R1. Just keep your eye on these European equities. This is an important moment of the session, I would suggest. Now, just as we're looking at that, let's just think about the data for the rest of the day, and there isn't any really at all until we get to a minor data release in the US at 3 o'clock, which is wholesale inventories for October. So really, basically, the main focus of the session from a scheduled news flow point of view doesn't come until 3:30, when we get the Department of Energy crude oil inventory data, which the whole world will be watching, given the remarkable moves we've seen in crude oil of late. We do have some ECB speakers. We've got Nowotny talking, actually scheduled to talk in 4 minutes, as well as Hansen from the ECB. So we've got a couple of ECB potential comments. But as I said yesterday, any kind of ECB speak, it's hard to see what more they can add after we've had their move on monetary policy last week on Thursday, Draghi's follow-up speech on Friday. It's hard to see what anybody else can add that's going to be of significance. And of course, we've got no Fed speakers now until we get the Fed meeting next week on Thursday. In Germany, of note, if you're trading bonds, we've got a Schatz auction, 2-year auction. That's at 10:30, looking to sell 3 billion. And we've also got in the US at 6 p.m. though, UK time, we've got a 21 billion T-note auction, 10-year auction at 6 p.m. Just on bonds, I guess, just to finish off here. Bonds have been lifted. And look at this chart for March 2016 Bund futures. Look at this range we've got. If you go back over the last few months, quite amazing, with the top at 160.60 and the bottom at 156.40. I mean, it's literally to the tick. This low here on the 4th of December is the precise low we hit on the 9th of November. And so this range we're in, and by the way, we're right in the middle of it now. This range couldn't be better defined. It really couldn't. It's just that we're in the middle of it. So, where do we go from the midpoint is always a tricky judgment to make. Directional bias from the middle of the range is tough. Bunds have been helped along to the upside over the last couple of days as inflation expectations drop, as commodities and oil particularly continues to plummet. So this has certainly helped to see the Bund push higher. And don't forget that we do have an ECB, and maybe Draghi on Friday helped also with the rebound this week, saying that ultimately there is no limit to the tools we're prepared to use within our mandate to achieve our mandate, so he's trying to just reverse some of the damage, I guess. But now we're here in the middle. It's a difficult one. Can you buy bunds going into a Fed rate hike that is now just 8 days away? That's a difficult one. I mean, you've got a real battle here between talking about long duration bonds, 10-year yields, for example. You've got a real battle between lowering inflation expectations and Fed rate hikes. And at the moment, now that we've bounced here on the bund, it may well be that those counter forces sort of neutralize each other, and we might get a period of consolidation now that we're back in the middle. So I'm a little bit non-committal directionally here as it stands for the bund. Okay, I'm just looking at the DAX there. We've had a key test, and for now it's held. But keep your eye on that. That really will shape the rest of the morning. I think the next sort of 10-15 minutes, if the DAX breaks this key level, the key level for Eurostoxx, we're right on it as well. Let me bring that Eurostoxx daily chart in. We're right on it here, 3,283. If this breaks, then expect an extension lower. If it holds over the next 10-15 minutes, if this level still hasn't broken, that may well then enable equities to have survived this initial bout of pressure and can move back up to test the highs. So I think technically this is the most important moment of the session for European equities. So I'll let you get on with monitoring this. It's 9 a.m. So we've got, remember on the data front, there is, nothing. Mortgage applications at midday is the next thing on the slate. All right.